Welcome to the deep dive. We sift through the data to bring you the insights that matter.
That's right.
Today, we're getting into the Q1 FY26 results for Heritage Foods Limited. We've got the financials, the press releases, the investor decks.
A good stack of information.
Exactly. And our job is to, pull out the core story. What drove things? What were the challenges? And what does it all really signal for this major Indian dairy player?
Basically giving you the key takeaways without having to read all the reports yourself.
Precisely. Your quick guide to Heritage Foods' latest quarter. Okay, so let's unpack this first part. We're talking the quarter ending June 30th, 2025. Results just got the board's okay on July 17th. So what's the main headline here from their consolidated performance in Q1? Any big milestones? How do the profits look?
Well, it's really interesting. There's a definite dual narrative here. On one side, you've got a really significant top-line growth. They hit a new revenue milestone.
Okay.
But, and this is the other side, that growth came alongside some real pressure on profitability.
Yeah.
So Heritage Foods reported its highest ever quarterly consolidated revenue. They actually broke through the 11,000 million rupee mark for the first time.
Wow.
Yeah, landed at about INR 11,368 million. So 11.37 billion rupees.
Right.
That's a solid 10% jump compared to last year.
Yeah.
Shows some aggressive market expansion.
10% is strong, but you mentioned profitability pressure.
Exactly.
Right.
Despite that record revenue, their EBITDA, their operational profit, actually dropped by 21% year on year. Came in at 739 million rupees.
Ouch.
Yeah, and that means their EBITDA margins took a hit, right? Contracted pretty sharply from 9.1% last year down to just 6.5% this quarter.
Okay, so quite a squeeze there.
And it follows through. Profit after tax, ETs, was down 31% to 405 million rupees. Penate margins shrank too, from 5.7% down to 3.6%. And their earnings per share, the diluted EPS, also fell from 6.3 rupees last year to 4.4 rupees this quarter.
So really a tale of two cities. Record sales, but profits definitely felt the strain.
That sums it up well.
So let's dig into that revenue then. Where did it come from? How did the core dairy business break down, especially between, regular milk sales versus those higher margin value-added products, the VAPs?
Right, that's the crucial question, isn't it?
Yeah.
What drove the top line, and maybe more importantly, where did that margin pressure really come from? So if you look at their standalone dairy segment, the revenue from operations was pretty substantial, just shy of 11.2 billion rupees.
Okay.
Their actual milk sales volume, that showed steady growth, up about 2.8% year on year. They sold around 11.6 lakh liters per day.
So 1.16 million liters daily, roughly.
Exactly. And the average selling price for that milk also ticked up a bit, about 3% year on year.
Okay, steady on the milk front. What about the VAPs? That's usually where the better margins are, right?
Usually, yes. And here's where it gets a bit complicated this quarter. VAP revenue did increase by 5.5% year on year, reaching over 4 billion rupees.
So growth there too.
Growth, yes, but. And it's a significant but. They faced some really unseasonal, quite unprecedented heavy rains across their main markets. This was back in April and May.
Ah, okay. I remember hearing about unusual weather.
Yeah, and that directly impacted demand for key VAP items, things like curd, buttermilk, flavored milk, and especially ice cream. You just don't sell as much ice cream when it's raining heavily in summer.
Makes sense. So what did that do to the overall mix?
Well, the bottom line impact was that the contribution from VAP, and this is excluding fats like ghee, to their total revenue, actually dipped slightly. It went from 37.5% last year down to 36.1% this quarter.
Only a small percentage drop, but I guess significant for margins.
Exactly. That seemingly small shift in the product mix towards relatively lower margin milk had a noticeable effect on overall profitability.
Right.
Now, the silver lining, I suppose, is that the weather did normalize in June, and they saw a healthy recovery in VAP sales towards the end of the quarter.
Okay, so it wasn't a full quarter impact.
No, not entirely. And if you actually include ghee and butter consumer packs in the VAP calculation, the total VAP revenue hit 4.54 billion rupees. That's a 7.4% year-on-year growth, and it represented a more solid 40.6% of total revenue.
Got it. So the broader VAP category, including fats, held up a bit better.
A bit better, yes. And quickly, beyond dairy, it's worth mentioning their other bits. Renewable energy brought in almost 29 million rupees in revenue.
Okay.
And their feed business subsidiary, Heritage Nutravet, it had a fantastic quarter. Revenue shot up 26% year-on-year to 533 million rupees.
Wow.
And get this, its profit before tax surged by an incredible 130% year-on-year, hitting 67 million rupees. Really shows some strong operational efficiency there.
Okay, so the feed business is really firing on all cylinders, but back to the main dairy picture. It sounds like those rains hitting VAP sales, that mix shift, those were big factors on the profit side. How did raw material costs play into this? Was that also a pressure point?
Oh, definitely. If you look at their whole cost structure, it was kind of a pincer movement.
Hmm?
Raw milk prices themselves went up by nearly 5% year on year.
Okay.
That's about 1.96 rupees per liter increase. Now, they did manage to increase their average selling price, the blended revenue per kilogram or liter across milk and VAP, by about 4.1%.
So they passed some of it on.
They did pass some on,
Okay.
yes. About 2.47 rupees per kilogram. But remember that drop in the contribution from the higher margin VAPs due to the weather,
Right.
that effectively dragged down their blended net revenue by about 0.8%. So input costs are up, and the average value of what they sold dipped slightly because of the mix.
I see. A double whammy.
Pretty much.
Yeah.
And on top of that, the company mentioned they made some deliberate pricing choices, specific adjustments probably to tackle slower growth in certain pockets. That further trimmed net revenue by about another 1.3%.
So rising costs, less profitable mix, and some pricing actions. No wonder margins got squeezed.
Exactly. It all converged. Their total consolidated expenses for the quarter ended up just under 10.9 billion rupees. And the biggest chunk, no surprise, was the cost of materials, about 8.07 billion.
Right. The milk cost primarily.
Primarily milk, yeah. Then you had employee costs and other operating expenses making up the rest.
Okay, that paints a clear picture of the challenges in Q1. So, given that context, what's the strategic direction? What moves are Heritage Foods making to, fight back against these pressures and keep growth going?
Yeah, they're definitely not just accepting it. They seem very focused on the long game, pushing several strategic initiatives.
Like what?
Well, a pretty significant one was the board approving the acquisition of another big chunk, 44.4%, of Heritage Novani Foods Private Limited, HNFPL.
Okay, what does that do?
That brings their total stake up to 94.4%. They completed that deal mid-June. And it's strategic because HNFPL is their yogurt business, essentially. This gives them almost complete control over that supply chain.
So more integration, efficiency.
Exactly. Allows for a leaner, more integrated model there.
Yeah.
Should help with costs and agility in the yogurt space.
Makes sense. What else?
They're also plowing money into capital investments. There's a big greenfield ice cream facility they're building. That's moving ahead as planned in Shimmerpet.
Right, you mentioned ice cream was hit by the rain, so building more capacity there signals long-term confidence.
Absolutely. They're investing heavily in other VAP areas too. The idea is these investments will start providing positive momentum through the rest of this financial year, FY26.
Okay.
And on the supply side, their milk procurement actually continued to get stronger. It rose almost 10% year on year this quarter, hitting 17.8 lakh liters per day. Shows the health of their farmer network.
That's a good sign on the sourcing front.
Definitely. And looking even bigger picture, they unveiled this Vision 2030. The goal is to become India's most admired dairy nutrition brand.
Ambitious.
It is. And it comes with renewed focus on things like farmer empowerment, governance, and, of course, innovation.
Are they backing that up with action, marketing, new products?
Seems so. They rolled out a big 360-degree marketing campaign, TV ads, digital influencers, more visibility on the ground.
Okay.
And they launched a new platform called Heritage Levo Healthy Living. This includes a revamped flavored milk range, fortified with vitamins A and D, and also some high-protein yogurts.
Tapping into that health and wellness trend.
Clearly targeting that health-conscious consumer. Yeah, expanding their VAP portfolio in that direction. And, one more thing, they got recognized by the Great Place to Work Institute as one of India's best workplaces in FMCG.
Oh, interesting. That speaks to their internal culture, I guess?
Yeah, suggests they have a strong foundation internally, which is often important for executing strategy.
So a lot happening strategically despite the quarterly headwinds. Now, stepping back even further, how does all this, their operations, their strategy, fit within the wider Indian dairy industry context? What's the potential there?
Well, that's where you see the long-term opportunity, right? We need to understand the fundamental strengths that Heritage has to navigate these bumps, like the weather, and really ride the wave of industry growth.
And that weight is big.
Huge. India is the world's largest milk producer. We're talking 23% of global production.
Wow.
And the domestic market itself is set for massive growth. A key driver is this big shift happening from the unorganized sector, local milk vendors, to the organized branded sector.
Which is still relatively small.
Right now, the organized sector is only about 40% of the market.
Uh-huh.
So huge room to grow.
Yeah.
And you've got government initiatives actively pushing this formalization and expansion too.
Okay. And Heritage is positioning itself to capture that shift.
Definitely. And VAP is central to that strategy.
Yeah.
As we discussed, VAPs generally offer better margins, and the demand for them is being fueled by urbanization, that shift to organized brands, and simply people having more disposable income.
Makes sense. What about their operational strengths? You mentioned the farmer network.
That's absolutely critical. They have these really deep, long-standing relationships with over 300,000 farmers. They emphasize fair pricing, transparency, guaranteed payments 3 times a month.
You mentioned no milk holidays.
Never since they started. That builds incredible loyalty and ensures a reliable supply. It's a cornerstone of their business.
And how do they get that milk to market efficiently?
They have this unique, federated supply chain model. It's all about freshness. Procurement happens really close to the chilling centers within 25 kilometers. Processing plants are within 100 kilometers of the market. And then distribution is kept tight within 50, 60 kilometers.
So minimizing travel time, maximizing freshness.
Precisely. And their distribution network itself is vast. Over 7,400 distributors getting products into 205,000 retail outlets. Plus, they have their own heritage parlors, these happiness points, a strong e-commerce presence on 16 sites, even using WhatsApp commerce now.
Truly multi-channel them.
Very much channel agnostic, yeah. They're also making strides in sustainability. They've got about 12.76 megawatts of renewable energy capacity from solar and wind.
That's impressive. How much of their need does that cover?
It fulfills nearly 40% of the total power needed for their dairy factories, a significant commitment to greener operations.
Okay.
And finally, they're really digitally enabled. They use systems for managing distributors, a live app for customers, even an app called Heritage VET Plus to support their farmers. It shows they're modernizing the whole chain.
So strong fundamentals, strategic focus, and a huge market opportunity. That seems to be the underlying story.
I think that captures it well, yes.
Okay, so let's wrap this up. Today, we dove into Heritage Foods' Q1 FY26 results. We saw that big headline number, highest ever quarterly revenue.
A major milestone on the top line.
But tempered by that dip in profitability, largely down to those unseasonal rains hitting the VAP mix at a tough time.
A definite impact on the margins this quarter.
Yet despite that, their strategic actions, the Novandi acquisition, the CapEx and VAP like ice cream, the strong procurement, the Vision 2030, it all points towards a continued push for growth, right?
Absolutely. They're clearly building on a strong foundation, those farmer links, the efficient supply chain, and that focus on the high-growth VAP segments.
All playing out in this massive, evolving Indian dairy market that's leaning more and more towards organized players like them.
Exactly. The long-term trends seem very much in their favor.
So thinking about all this for you, our listener, given Heritage's resilience, this clear strategic shift towards VAPs and their expanding capabilities, how might this quarter's weather-led blip, as we could call it, actually spur on their transformation? Could it accelerate their move from being seen just as a dairy company to becoming a broader, innovation-led FMCG brand?
That's a great question to ponder.
And building on that, what might be the next big thing for them? What kind of breakthrough product or maybe a technological leap could we see from Heritage Foods that really cements their leadership position in the coming years? Something for you to think about.